bring up, one of the issues that continuously comes up, and Vineet, I'd like your thoughts on this, and clearly the logistical aspect is very much there, is access to finance. And we saw during the heydays when, over-leveraged SMEs went out of business, they tried to become large caps, and then, the whole debt equity mix just didn't go in their favor. We've seen the markets picking up again. We've seen the debt side of the story also picking up again. But Vineet, what are the lessons that we've learned that shouldn't be repeated as sort of the cycle appears to be making tentative steps towards turning?
I think there are two aspects to finance availability. One, the institution finance has become more mature in understanding SME business value and understanding SME business proposition and the promoter intent and commitment to SME compared to where they were. And therefore, I think we are better informed and we would be taking better decisions compared to where we were. Number two, there is new class of capital which has come in. Risk capital is a lot more available now than ever before. PE funds are there, VC funds are there, all sorts of people are looking for ideas. And when you talk to capital, they're saying there is a lack of ideas, and therefore there is enough capital available for good ideas. And that brings me to the third point, and I think that's a very important point. When you look at the SMEs are waiting in perpetuity for the right valuation. And, and that is what happened in the last cycle, that if you continuously wait for the ultimate valuation, you actually die and you never get the valuation. Growth capital is very, very important. So the ability to access growth capital at the right moment from the right sets of people not only assures that you have the capital today, but assures you have opened a line of credit to have capital when you need it tomorrow. I think with this maturity and understanding coming both with the SME sector and the financial side, I think we're going to see better days tomorrow than we saw yesterday.
Okay, so the fact of the matter is, we hear it from banks that we recognize the contribution of SMEs, but yet, most companies will tell you they need that recognition, whether the fact that they've got private equity funding, then yes, the light bulb goes on at the bank's end that yes, now we're willing to extend capital to you. Or, you use connections that you have and, go on, so forth, down that direction. How do we change? How do we bring about an inflection point in changing this route of financing for small and medium enterprises?
Well, clearly, I think the single biggest problem that SMEs have is access to capital. And despite the very sharp growth we've faced in the last 10 years in terms of private equity and venture funding, the fact is if you compare to any of the developed economies, the quantum of funds available in India, particularly for SMEs, through equity investment is limited. I mean, this is still not Silicon Valley. And then you look at debt. Everything that you read in the papers about the prime rate or the lending rates, they don't apply to SMEs. SMEs pay substantially more. And even when they're able to access debt, the conditions are very different. We still do not have SMEs able to get funding based on their cash flows. They still have to come up with security. They still have to come up with collateral. And this becomes a huge hurdle. And I think we are heading in the right direction. We are heading in the direction of more equity funding becoming available. We are heading in the direction of gradually more debt becoming accessible by SMEs, but we are not yet at a tipping point.
Shivinder, your comments.
There's no question of the fact that trending is right. But I feel that if we need to grow as a country and if we need to grow the MSME sector, we have to actually focus and be able to fund much smaller than the stuff that we're talking about. We're not talking about the guys who've already got the idea and have made it, and looking at, say, a growth to round 2 or round 3. We're talking about people who are a one-man army who are looking at creating something, and they need to go and get themselves funded, whether it's through VC or it is through bank loans and debts and so on. And I don't think we have any appetite as a country in debt or VC funding for that kind of stuff. So when you get to a 5-10 crore business or a 20 crore business to grow that, I think there is money available. But to germinate the idea or to be able to test an idea, even if it is a small amount of capital, we don't have that money, we don't have that focus, and we don't have the infrastructure to create to that. And the conversation that I get to have with banks, and we have an NBFC, so we heard a lot about it, we do a lot of funding to SMEs as well, is the fact that you need to have a distribution network that is able to actually reach out to these MSMEs, to be able to fund them, track them, get their credit ratings done, as also to be able to get recoveries done. And that infrastructure cost is so humongous, it doesn't pay you back. And therefore the rates go up double dozen interest rates and so on and so forth, which doesn't make it viable anymore. So I think the function is to be able to actually create capital and create a distribution network.
Pramod?
The overall situation is improving quite fast, I think, in some respects. You've got lots of venture capital, lots of angel investors, lots of groups of people coming together to provide funding. And I think awareness is a critical issue, distribution is a critical issue. But I don't think we should forget that India is still paying for a lot of noise, a lot of bad news coming out of our country, lots of things like that, which have prevented new capital from rushing in as much as it might have in the past. And we are also paying for the fact that at one time valuations were very high, people got burned. Now this is unfortunately a wonderful bubble that every country chooses to repeat for itself, regardless of where you are. But I certainly see that the excitement around things, conferences where new products, new entrepreneurs, new people are coming through across India is very, very high. But India's reputation has been hit. I think we must recognize that. It will repair itself. It's not a permanent situation. And I think the last point I would make is we have been impacted by global funds flow. A lot of people have become very conservative because of the bloodbath that they've gone through, certainly in the US and Europe. That does affect us as well. So we're going through a little bit of a timing issue, I think.
Right. So how do you really approach this issue of lack of trust? I mean, do I trust the numbers that I'm seeing, that I'm going to extend that loan to you? Suneeta, Reddy, I mean, the Apollo group now is a huge group. But I'm sure, during its days when it was struggling, that was a big issue.
It was, but I like to believe that knowledge in a sense is capital, and that if you create a business model that people would be willing to invest money into, that you can raise enough equity. And I think there is enough in the country that people would invest in a business model that makes sense. The second thing I'd like to talk about is I think our second biggest challenge was actually institutional financing. So if we look at it in two buckets, I don't think institutional financing is really prepared to actually fund SMEs. One is they're not prepared for long gestation periods. And I think it's here that we need to have structured products in terms of, to meet the cash flows of the SMEs so that, and to understand the way SMEs operate, And I also think that for people who are starting out, I mean, if they want to raise equity capital, it's critical that they create business models that are very transparent and, that investors understand.